Hello, this is Elvis. Today we're going to go talk about group life insurance to help you pass the test and to also help me pass the test. Group life insurance is written for employer group plans and is most often written as an individual renewable term policy. An important underwriting principle of group life insurance is that all or a large percentage of persons in the group must be covered by the insurance. Contributory is an employee group plan in which employees share the cost, and it requires that 75% of all employees participate. Contributory, non-contributory is an employee group plan in which employees do not share in the cost, meaning that it requires that 100% of all employees be eligible. The features of group life insurance is, now pay attention to this one because you're going to have to pay attention to it on the test. The features of group life insurance is the individual does not have to provide evidence of insurability. Group underwriting is involved. Group underwriting isn't involved, meaning that if it was individual insurance, then you would have to provide evidence of insurability. But since this is group life, you do not have to provide evidence of insurability. And group life are not issued as individual policies. They are often issued as master contracts instead. Low cost due to lower administration, operative, and selling expenses associated with group plans. Flow of insureds entering and exiting under the policy as they join and leave the group. Typically issued as level term insurance, which provides a fixed amount of coverage throughout the term of the contract. Since the individual does not own or control the policy, they are issued a certificate of insurance to prove they have coverage. The actual policy, which is called the master policy, is issued to the employer. Employees are called certificate holders, and employers are called contract holders. The eligible groups are is that there's no minimum number of members required for group life insurance. But the eligible groups are single employee groups, multiple employee groups, labor unions, trade associations, credit or debit groups, fraternal organizations, trustee groups established by two or more employees, or labor unions. Employees must be full-time and actively working. If contributory, employees must approve of an automatic payroll deduction. New employee probationary period is usually 1 to 6 months. And an employee has 31 days during the enrollment period to sign up. Otherwise, they may need to provide evidence of insurability. And the classifications of risk. Insurers require that a minimum number of group members, also known as employees, participate in a group insurance plan in order to reduce adverse selection. Now, adverse selection means that the people most likely to need life insurance will purchase life insurance in greater numbers than those in good health. Let me repeat that for you because this is also going to be on the test. Adverse selection means that the people most likely to need life insurance will purchase life insurance in greater numbers than those in good health. Meaning, there's a lot of people that need life insurance and they will purchase those, as opposed to those who don't have life insurance. And the degrees of risk is preferred low risk means lower premiums. If you are low risk, then you will have to pay lower premiums. Standard and average risk means no extra ratings or restrictions. Substandard risk means high risk rated up with higher premiums. Declined, not insurable, potential of loss to insurance company is too high. Oftentimes, if you are a very high risk to the insurance company, they will decline your your policy, meaning that you won't have to pay a premium because you are not part of the policy, because you are of high risk to the company. Lower risk tend to have lower premiums. If an applicant is too risky, the insurer will decline coverage. Life coverage. Life insurance is normally offered as a guaranteed annual renewable term policy. The policy is issued for 1 year and may be renewable annually without evidence of insurability at the discretion of the policyholder. Group whole life offers permanent protection for insured members under the group. Permanent means whole. Whole is permanent, and it must benefit 70% of all employees. At least 85% of all participating employees must be the key employees. Benefits are determined by earnings, employment position, and flat benefit. Most employers will establish benefit schedules according to the following: conversion to individual policy. If a member's coverage is terminated, the member and his dependents may convert their group coverage to individual whole life coverage without having to show proof of insurability. Conversion period. An individual must apply for individual coverage within 31 days, not 30. 31 days after the date of group coverage termination. An individual is covered under the group policy during the conversion period. Group policy termination. The master policy is terminated. Each policy member who has been insured for at least 5 years is permitted to convert an individual policy, providing coverage up to the face value of the group policy. Franchise life insurance is used where participants are employees of a common employer. That is, the employer may operate several companies or are members of the common association or society. The employer association or society is a sponsor of the plan and may or may not contribute to the premium payments. Unlike the employer group plan, each individual will be issued an individual policy and it will remain in force as long as the premiums are paid and the employee member maintains their relationship with the sponsor. These are used by small groups who individually do not meet the state's minimum numbers required by law. Group credit life also sets up banks and finance companies in case of if the insured dies before a loan is repaid. Policy benefits are paid to the creditor and used to settle the loan balance. The premiums are usually paid by the borrower. A decreasing term policy is commonly used. Blanket life insurance covers groups of people exposed to the same hazard, meaning if a group of people are in a blanket, they are exposed to the same hazard. That's what blanket life insurance means. Such as passengers on an airplane. No one is named on the policy, and there is not a certificate of coverage given out. Individuals are covered for the common hazard. Group permanent life. Some group life plans are permanent whole life plans using some form of permanent or whole life insurance as the underlying policy. The most common types of permanent group plans are group ordinary, group paid up, and universal group life.